Good evening, this is Giuseppe Basile. I'm the Essential. You can find at the blog FibonacciStalking.com. I also post regularly on Twitter using the @Fibstalker nickname. Good evening. This video is part of my weekly newsletter. I'm going to send the newsletter on Sunday in a few hours. And this video is also part of my Fibstalker view on futures. That's a collection of videos in which I focus on dollar index, SP500 and EuroFX currency futures contract. What you see on the screen is the weekly chart. In my Fibstalker view on future series, I like to start from a weekly chart and see where we are in the long term, and then drill down into the daily and see what are the setups we could work on. So on this weekly chart, this is the US dollar index continuous contract aligned to the March 13 expiration. That's the weekly chart. This contract is traded on the ICE US. We had actually this measure move lower, which actually offered resistance in the 84 area in mid of 2012, and this is also a short setup. As we can see, price is actually moving lower into what would be the setup. So at the moment we have a setup here which is well below the lows at 75, and this target is in 71.27, and so 71.30, and should this move continue lower, if the dollar becomes very weak, we could even see the dollar at 64 cents, 64.70 cents to the sorry, that's the dollar index. So we could see the level of the index here. Now I don't see any fundamental reason at the moment why we couldn't get the dollar down to 71. So we're going to actually going to target those levels. And going back to the weekly and to study where we are at the moment, during the last part of 2012, we also had this measure move lower here within this larger weekly measure move, and we had support in the 81.60 area. We were able to resistance at this area. We were able to identify and time this resistance. If you go back and watch my videos, you'll see that we were able to identify this level, and we actually took advantage on the euro, which the euro dollar cross, which actually inverted its move lower and start moving higher. Now this weekly setup, as you can see, has a target in 77.50 area, and I think we can get there in the next month or two. Now on the opposite side, because you have to remember that in the market there are always two sides. There are bulls, but there are also bears. In this case, bulls were supporting, even if a little bit loosely here, the 79.30 area, and we got support here in September, and then again October, and then again at the end of 2012, and now at the beginning of 2013, but this was not enough to reverse the direction of the dollar, so the dollar index. So I will remove this support here. I don't believe we have a strong support here, and we're headed towards 77.50. Going to the daily chart, again we can see this last measure move lower, having target in 77, and in the last 2 months we had quite a difficult chart for the euro dollar to read. We had this measure move lower, which was busted. Price went above 80.90, but then price came back anyway, and price was able to touch this and reach this 79.30 area of resistance. Then I said that in December the 20th. I said last year. I said that we could get a rally higher. I was not expecting such a rally here, but price went higher on the fiscal cliff affair for a few weeks, 3 weeks here, as you can see. But then it came down, and we had a sequence of measure move here, and with support in 79.53 was the first trace, and we had targets in 80.20 and then 80.60, but then the next measure move failed, and this decreed the failure of this move higher, and we started again our move lower, which is compatible with this long-term and intermediate and long-term view on the dollar. So in the at the beginning of 2013, after this rally, then we had a move lower, and then eventually we traded this measure move lower. I gave you last week, I told that by feeling a threshold level we could see the 79 level, which was the target level of this setup. And as you can see, that we have a reaction here now that will bring price higher. So you can reference the trading plan that I have in the newsletter, but basically what I'm expecting here, I'm expecting a rally back into this 79.60 area, and then a continuation lower towards that 77 target. Actually, if we change the scale here and look a little bit what we have below, I can show you that we have targets in the 79 area, and we actually can see if we trade the 79.60, we have target in 78.60, and then the 78 would be the second target. So I see no reasons why we could not continue lower when we after we trade the 79.60, and I think we can get to the 76.50 by the end of February. Okay, so this is it for this review of the dollar index. I hope this is useful and it's interesting. Of course, we can use the dollar index as a guide also for the euro dollar cross, especially, but also for the other pairs that I'm going to feature in my Fibstalker view on currencies later on, and you will find this in the newsletter as well. Thank you very much for your attention. I wish you a very good evening and a great trading week next week. If you want to receive information, just type Fibonacci stalking.com, and that's my blog, and you can register there for free for the newsletter, and also for the daily updates on the euro dollar and other instruments I follow. Thank you very much for your attention, and thank you. Bye bye.